Good morning, everybody. This is the Live Market Open for Friday. Happy Friday. It's June 3rd. It's Non-Farm Payrolls Day. I'm Yohay Elam, Forex Crunch and Market Movers podcast, doing the show as usual for FX Street. Good morning, everybody. I see already Ed here, and I see quite a few others in the room. As always, we'll talk about recent developments in markets, Draghi, and other events in Vienna, charts and levels. The next less than 24 hours, a preview for next week, as we always do on Friday. And of course, your questions. If you cannot see the chat box alongside the screen, well, most of you know the drill. The address is here at tlk.io/fxrate-forex-live-video. Okay, what did we have yesterday? Before we talk about Draghi, OPEC meetings were held in Vienna yesterday, and they ended in nothing. There were very nice smiles. At least the atmosphere was more positive, but they didn't decide on anything. No quotas, no freezes, no limits, no decisions in general. They only declared that the organization is not dead, probably just resting, as the Monty Python sketch goes. Brexit, no new polls in the UK. I would say that I read some analysis saying that the recent polls that showed a strengthening for the Leave campaign are due to the bank holiday. The reason is that more young people were on holiday during this bank holiday, and young people tend to vote stay and not leave, remain and not leave, and that's why we had a change. Anyway, we'll be smarter, I guess, next week. And in general, markets are stable. This is also relevant for the ECB and the euro. So this is euro dollar, more or less where it was yesterday, reached 112.20, but never went too fast. Now let's talk about Draghi, the ECB. So as a as expected, widely anticipated, no changes were made to the ECB's policy. Good morning, Fabian. Good morning, Luca. And the forecasts also were hardly changed. So a little bit higher on inflation in 2016, a little bit higher on growth in 2016 from 1.4 to 1.6, but absolutely no changes for 2017 and 2018, okay? So the ECB made the minimal changes, adjusting with the data received recently. It's hard to say that, for me, this shows a lack of optimism, okay? So, but this lack of optimism contradicts what we heard from Draghi in terms of his atmosphere. I mean, he did pat himself on the back for what the ECB did in March. He did talk positively that the ECB managed to sort of mitigate a worse crisis after those stock market events early in the year. And he also mentioned quite correctly that the ECB hasn't completed its job. So it was also a wait-and-see mode, okay? Wait-and-see mode in the fact that in June, we have June 8th, if I'm not mistaken, the implementation of buying of corporate bonds, and then June 22nd, very interestingly, one day before the EU referendum in the UK, the ECB begins its TLTRO2, okay? Anyway, the measures, this is not, in general, it's not a surprise. The measures were planned for June, measures announced back in March, okay? The expansion of the QE program from 60 to 80 billion was announced also in March and implemented already in April, okay? What else do we have? Let's go back to the slides. I was asked about Greece regarding the accepting Greek bonds as collateral. Good morning, Ralph, as well. And he said, not yet. We have to see. The first review has to end. It's bad news for Greece, not a market mover in general. Yeah. He did say that so far he has seen no secondary effects of the measures. Not negative, the low oil prices haven't reached other prices. And also he hasn't seen really, from all the measures, price pressures to the upside. He did single out Germany. He said maybe, perhaps not. He wasn't sure even about that. That maybe some wage pressures in Germany or something like that. We didn't have any German reaction to that. Yeah. I was disappointed that nobody asked about helicopter money. I think helicopter money will certainly be on the agenda, starting first in Japan, perhaps quite soon, basically canceling the debt of the government or something like that. And eventually it'll come to Europe, always late. Nobody asks about that after all the denials in the previous meetings. And he did say over and over again that governments should do more reform, and things like that. Basically, the message is we're doing the best we can, but you also have to take your share. This is not a new message. All in all, what we've seen during yesterday's events is what I showed you before. Little movement in euro dollar. So the whole range was 112.20 when things looked better, when he was more optimistic. And at the end of the press conference, it was something like 112. I mean, the low level for the press conference was something like 111.60. Later, after the press conference, we did see a sort of a post-Draghi drag on euro dollar, and we did fall under 111.50. Currently, as you can see, the range is very narrow, only 20 pips on euro dollar. Extremely frustrating for many. 111.41 to 111.59. Let's be generous. 18 pips maybe. Not too much. Well, you can blame it on the tension towards the non-farm payrolls, and I'm sure we'll get out of the 20 pip range. But that's where we stand on euro dollar. It's so choppy. I would say I remain with the 112.50 as resistance. 112.30 some support, stronger support at 110.70. Okay, that was the big event yesterday. We also had other events. Spanish unemployment, we talked about it during the show. Good news, it fell 120,000. The number of unemployed here in Spain, another anecdote, is under 4 million. That's good news. Unfortunately, not many of these jobs pay well. And if you ask the average Spaniard, they're not pleased with the situation. And we also know that the government it's the better situation is thanks to some government spending ahead of the elections in December. And Prime Minister Yohay already told the European Commission, he told Juncker that he'll make the necessary adjustments after the elections, of course, the June 26th elections. Okay. Comment here by Luca. Read the Verizon strike may affect down the non-farm payrolls reading. How can a strike affect unemployment numbers? Makes no sense to me. Yeah, we'll talk in depth about the non-farm payrolls. It's. I'll just mention that regarding Verizon, it's just the number of people employed right now. So if a person is not at work in the time of the survey, this impacts the survey, even though he is still employed and just on strike. That's what works in the US. As the ECB is out of ammunition, says Fabian, the euro can't do anything else than soar up high. Yeah, are you still bearish on the euro? I'm slightly bearish on the euro, dollar, but that's because of the US dollar, okay? Because we still have this monetary policy divergence. Yes, the ECB may be close to the end of the road. I mean, -40 negative deposit rate, QE enlarged, new measures still in the pipeline. But in the US, there's still a good chance of rate hike in July, and that supports the US dollar against the euro. Eventually, I think we'll have helicopter money, but that'll take a long time from now. I don't see big moves. I'm not talking about extreme levels. I'm talking about pressure to the downside on euro dollar. It says I'm always bearish on euro and look for more shorts than longs. Yeah, remember, timing is everything. So being bearish in general doesn't mean we'll have a significant move right now. But let's see. We're currently at the 111 handle. Let's return to more events we had yesterday. Rate hike in the EU, not in my lifetime. Yeah, maybe in your lifetime, but it'll take many years. Other figures we had yesterday. UK construction PMI missed with 51.2. This was the strongest sector in the UK economy during the recovery, but nothing of substance right now. It's been slowing down. Remember that the Brexit polls remain Brexit, have more impact at the moment than the figures. ADP from payrolls in the United States, bang on expectations. Expectations were 175, and the outcome was 173. This is within expectations. No change. This means no shifting of expectations for today. For the NFP, for the official report from the government. Also, jobless claims didn't surprise with 267,000. Well, also more or less as expected. Crude oil inventories, they dropped once again. So this is in theory bullish for oil, but it was somewhat less than predictions. And also on the other hand, well, it was quite mixed. Production in the United States continued falling, another drop of 0.3%. So oil is still supported. The other hand, well, it's very balanced, as we'll show you soon. And Carney introduced a new 5-pound bill and did not say anything. So quite quiet on that front as well. Before we move to the charts, I see here another comment by Luca. Interesting to note the divergence in behavior in euro and yen, both the ECB and BOJ out of ammunition for now, and both diverging from the Fed. Still, the euro goes down while the yen goes up. Yeah, and I think in Japan we had just more events. We had the sales tax hike delay, and that was reported. And then, I mean, we had a buy the rumor and then a sell the fact event. Okay. In the Eurozone, it's more or less steady in the forecasts of the ECB, in everything, in data and in the value of the euro. Okay, let's talk about other charts. In general, we do have very stable markets. Okay, pound dollar remains depressed after this week's polls. One more comment from Fabian. Also, Draghi said yesterday that they have no real influence on the currency rate. And yeah, he always says that the currency exchange rate of the euro is not a target for the ECB. But of course, they're taking it into account and monitoring it. Of course, they have a lot of influence on that. When Draghi said each time he says something that is a change in monetary policy, it has an impact. Recently, he tries not to rock the boat, and I think he succeeds in that, sort of more pushing the ball to the government's court. Anyway, pound dollar remains somewhat depressed, but also stable ahead of the non-farm payrolls. 145 is resistance, followed by 145.80 and 146.50, waiting for the next pull. 143.70 and 142.80 are lines of support. We also have an event this morning in the UK. We'll reach today's events after we cover the charts. What we have seen yesterday is another strengthening of the yen. As you guys mentioned, 108.25 for me is the next line of support. 109.40 is resistance, okay, followed by 110.50 and 111.50. Lower support, 107.65. The yen is showing us what volatility is, okay? I mean, more than the euro at least. Canadian dollar, very, very choppy. The ranges are becoming more and more narrow. Today we only have trade balance from Canada, no jobs report. So oil prices, I think, will remain more dominant. 131.70 and 130 are the lines I'm watching, but the range is much more narrow. Aussie dollar, more and more bears mount against the Aussie dollar, but things are quite stable and even looking better this morning. Commodity currencies, also the Kiwi, also the Canadian dollar, are slightly stronger. 73 is very strong resistance. Support 71.75 and even stronger at 71.40. I read many bearish outlooks for the Australian dollar, okay? And nothing of sub. We did have in China the services PMI, and it was more or less as expected, so nothing that important over there. And the Kiwi moving up alongside the Aussie. Yeah, 68.40 is, as you can see, clear resistance, and we're getting very, very close to that level. This week we had positive milk prices from New Zealand, but no, for the second consecutive time, and it keeps the Kiwi bid. Let's see if it manages to break above 68.40. High resistance 69.50. 70.50 is sort of double top up there. 67 and 66.70 are lines of support. Before we move to more charts, Ed says my Bitcoin account is doing well. I bought around 330 and seeing it having room to push higher. China is using it to export money. Okay, I haven't been following Bitcoin that closely recently, but yeah, it's an alternative currency. Blockchain in general, money will become digitalized in the next few years. The US dollar against the Swiss franc currently hugging the 99 level. Parity remains resistance, untouched resistance, support 98 and 98.50. Okay, very, very stable as well in the range. Euro Swiss, also extremely stable, 110.47. 112 is high resistance, 110 is support. Euro pound, here we do see levels. Okay, we didn't move above the 77.40. Let's see if we're going to erase this line. Currently, I still see it as a separator of ranges. 78.30 and 79.30 lines of resistance. Support at 76.50 and 75.60. All right. Remember, a Brexit is also bad for the Eurozone. Euro yen, here we did see big movements. We fell under this 121.65 level. It's all driven, of course, by the yen. Euro was fluctuating, but the yen is the bigger mover. So the low level here is 121.06 today, so 121, perhaps further support on the downside, and followed by 120, which is just a very round number on this cross, which is a significant cross. I know many traders don't like it, prefer pound yen. Well, I understand why, but anyway, these are two more important currencies, the euro and the yen. Resistance now at 121.65, followed by 122.35. Okay, pound yen, a spectacular crash, and it continues. We reached resistance up there at 163.80. Very nice rejection from resistance, and a spectacular crash so far of 700 pips. Okay, the next line of support 155.80 and 154, followed by 155.180. Okay, and last but not least, the price of oil in general, it has been trending up, but now seems to have topped just a bit. The 50 level, we didn't manage to conquer that level, and at the 49.48 handle, we had a few dips on rumors about crude oil, about OPEC, dips under 48, sort of rumor that OPEC is going to decide on some production cut or freeze. Oil went up, then no decision at all. Boom, it fell down. All in all, we're back to the same range. Lots of stability in markets. Good for some, bad for others. More comments here. 366. Okay. Yeah. Okay. Very, very stable markets this morning. Euro dollar is bang in the middle of the very, very stable range. Let's talk about today's events and, of course, preview the non-farm payrolls. Right here. So, no, sorry, right here. So at 8:30 GMT, we have the UK services PMI. This should move markets at least for some time, okay? Because this is the biggest sector in the United Kingdom. And if the United Kingdom, if the economy in the UK is deteriorating because of the Brexit fears, it should be reflected in the services PMIs. Let's look at the FX rate calendar here on Forex Crunch. Yeah, so the market, it's a private survey, of course, by market. We're expecting also here a lot of stability, a rise from 52.3 to 52.5, which reflects mediocre growth, okay? As always with UK figures, and we had a special clip about that, we have lots of action before the publication, 20-30 minutes before, and then a reaction to that. In many cases, a buy the rumor, sell the fact. If we have a big fall, especially under 50, I think we could see a significant impact beyond the immediate reaction, beyond the 20-30 minutes. I'm not sure we'll get that, of course, but with all this fear about Brexit, maybe it'll be worse than what the official figures here show. And of course, if it's positive, it'll be positive for the pound. Again, usually services PMI has a big impact. This time, with all the talk about Brexit, it should be a bit more limited. Okay. Continue. Of course, non-farm payrolls at 12:30. We'll talk about that more in detail in a few minutes. Canadian trade balance at the same time shouldn't have a big impact. It usually shows a deficit. The ISM non-manufacturing PMI and factory orders could become important. I mean, these are always important figures, but more important when they're released before the non-farm payrolls, because the ISM non-manufacturing PMI, the services sector survey, is a hint for the NFP. Okay, so let's talk about that as well. And a speech by Lael Brainard of the Fed. She's a dove. She'll speak, close to the market close. So let's talk about the non-farm payrolls, the biggest event for the day. It's the report for the month of May. And as you mentioned before, this time it's a bit messy. The Verizon strike is to blame. The NFP survey is held around the week of the 12th of the month, okay? The 12th of May in this case. And this was during the strike. We've seen a jump in jobless claims, okay, to 294 at the peak. Now we're back to the previous levels once the strike has ended. So the lower expectations, I mean, we had many months of 200 plus, so this time we're expecting 160,000. But if you read all the analysis, maybe Verizon did hire other workers instead. It's going to be messy, okay? I mean, I think that it'll be very hard to surprise markets. I think if we have under 120,000, it's really bad news. It means it's more than Verizon. It's bad news for the economy. And if it's 200,000 or higher, then we can say, wow, the U.S. job market is so strong. Even despite the strike, it's doing great. But a wide range between 120 to 200, in my assessment, will leave the full stage for wages. We talked about that yesterday, Valeria Bednarek and I. So what I'm looking, well, official expectations are for 0.2 month over month, okay? Last time it was better, 0.3 month over month, and year over year it was 2.5%. The year over year is more important. I would say that 2.7 or higher is excellent. Why am I saying that? Because 2.7 was the highest level of year over year gains seen a few months ago. If we match or exceed this level, it means that there are real price pressures. Well, maybe a one-off, but at least something is moving, not only employment, but also inflation. If it were back to 2.3, it's terrible. Why 2.3? Because during 2014, 2015, for a very long time, we had wage gains that were ranging between 1.9 and 2.3. A setback to 2.3 will be devastating. Now, the unemployment rate is expected to fall to 4.9%. We've already been there. It shouldn't be a market mover because, well, it's an important political figure for Obama, and that's for Clinton and for Trump and whoever, okay? But for markets, it doesn't mean much because it's also, it also moves because of the participation rate. Also, I mean, higher participation rate means usually higher unemployment rate and the other way around. So if we see a big drop in the unemployment rate, but also a drop in the participation rate, it's not really good news. Also watch for the real unemployment rate, U6, which is stood on 9.8%. But I would say that this time, because of the messy strike impact, the Verizon strike, wages take center stage, okay? Yeah. Also, yeah, I see here some comments. We might have revisions. The Fed can be credible if it, well, sticks to the plot, explains us what it's going to do and what it depends on, and then acts more or less the same. Regarding revisions for the non-farm payrolls, I read analysis that this time we'll have a positive revision, probably, given the seasonality, given the past for the previous figure. And previously, we had 160,000 jobs gained, also similar to the expectations now, and there was a disappointment. On the other hand, wages came out better than expected, and wages had the upper hand last time. Okay, so this time I'm expecting more of the same. Okay, sorry for that. Let's look at the calendar here. Yeah, last time the participation rate was 62.8. And the unemployment rate is expected to fall from 5 to 4.9. Let's see if I didn't miss anything. Average hourly earnings, we talked about that, drop from a rise of 0.2 instead of 0.3 last time. Average work week expected to remain unchanged at 34.5. Yeah, and the NFP, here we have, well, last time it was 160, and here we have expectations, well, 164, more or less the same. Also, we have trade balance in the United States should be totally overshadowed by the NFP. A wider deficit of 41.3 is expected. Canada, we have labor productivity and trade balance. Yeah, I mean, for the Canadian dollar, maybe against other currencies, it could be significant. Well, not that much. It's not that important anyway. Now, if we have, sort of the non-farm payrolls report basically as expected, no surprises, okay? Then we can expect the ISM non-manufacturing PMI, and to a lesser extent, the factory orders to have an impact. The ISM non-manufacturing PMI, that's the services sector report, okay? Usually the employment component in this report serves as a hint for the non-farm payrolls. This time, it'll be the employment component will be disregarded because 90 minutes earlier we'll have the NFP. So the headline figure this time is more important in this report. A small change is expected, a drop from 55.7 to 55.5. 50 points, this is the level that separates growth from contraction. And it's not that, I mean, it's 55 or 56 points. It's a relatively positive level, okay? I mean, showing significant growth in the biggest sector in the United States. If we have a significant fall, it's of course negative. It'll leave traders with sort of a bad taste in their mouth ahead of the weekend. And if we have a jump, of course, it's a sort of a win-win situation, okay? Sort of a victory lap. Also watch out for factory errors, less important because manufacturing sector is smaller, but also here a second consecutive gain is expected from, after 1.1, 1.9 is on the cards, okay? Yeah, so these are the events for today. Clearly, we have the non-farm payrolls as the key event. Here are the expectations for a June rate hike. They did fall this week from, somewhere around 30% to around 20%. As I mentioned last week, it made the case for a July rate hike, and this remains stable at nearly 60%. Again, my scenario is the Fed will wait for the Brexit, will wait for the initial GDP assessment for Q2, and will hike in July. Another thing we learned yesterday is that Janet Yellen will speak to Congress on June 22nd, one day before the referendum, June 21st and 22nd, what's called sometimes the Humphrey Hawkins testimony, the biannual, twice annual testimony. It'll be before the Brexit, so maybe she'll be more cautious, but she could still lay the ground for a rate hike in July, okay? They could just call a press conference and that will tell us everything. All right. Comment here by Ed. Cuts in their forecast in German inflation growth numbers from the Bundesbank. That's news. I missed out on that. Anyway, we already do know, the Bundesbank already said that Q1 was great, but they're not expecting the same. They're expecting much slower growth in Q2, and the same goes for the rest of the old continent. Okay. Inflation also in Germany, despite what the ECB said, is not really that strong. Okay. I want to show you something else. Oh, we had, we'll do, of course, a preview for next week, but let's do another recap of what we remember. We had this special segment about the road to June 16th, 6 events, 3 are already behind us. Sorry. 3 are already behind us. Today we'll get the 4th one, and next week we'll have the 5th one. So we had core durable goods orders. They disappointed. They showed a lack of investment. GDP update was as expected, more or less 0.8 revised to the upside. Core PC price index that we had earlier this week showed 1.6% core inflation. As expected, and like last time, no surprises. And today we'll have a key release. On Monday, of course, we'll have another speech by Janet Yellen. Okay, so 3 gone, 3 to go, hugging the weekend. And then we have also retail sales. All right. More questions before we reach the preview for next week. And after the preview, we'll have a wrap up for today. Just another look at the charts. Absolutely no changes. Well, the pound is going up. Maybe there are rumors, leaks about better than expected services PMI. Who knows? Other currency pairs. Oh, the Aussie is extending the gains. Happy days in markets. Oh, Kiwi dollar is breaking, or at least lifting its head above the 68.40 level. So again, major pairs are a bit more boring and minors are on the move. Okay. Let's preview next week's events. So this is a preview for the week beginning on June 6th, ending on June 10th. 5 days, Monday to Friday. So on Monday, no time to rest, no time for echoes from the non-farm payrolls. Janet Yellen will be speaking in Philadelphia in a speech which is highly anticipated. She did surprise by making some comments last time. She talked about a rate hike in the coming months. She showed confidence also on inflation. Now she'll have an opportunity to comment also after this non-farm payrolls report that we'll have today. So the markets will not have or will not need too much time to assess what this report means. And again, it could be confusing because of the Verizon strike. They'll just have the immediate analysis from the one that matters most, the chair of the Federal Reserve, Janet Yellen. So this event really stands out. It's Monday afternoon. On Tuesday, we have the Australian rate decision. Will they, won't they cut? According to the recent GDP figure, everything's great in Australia, they won't cut. It's most likely that they won't cut, but I'm not sure. I mean, not all is perfect in Australia. Not all as good as gold, as they say in the land down under. So I think they will be relatively cautious. On Wednesday, we have oil inventories, as always. So also important for the Canadian dollar. And a rate decision also by the RBNZ, the Reserve Bank of New Zealand. It's a bit mixed there. Not expected to cut, but you never know. They can surprise markets. All right. So Monday we have the United States. Then we move away to commodities on Tuesday and Wednesday. On Thursday, Draghi is back 1 week after the ECB. He'll be speaking in Brussels, okay? And let's see if he makes big statements. Apart from asking governments to do more, which is his regular line in recent months, let's see if he shows more optimism or more worries. Given his speech yesterday, I expect a bit more worries, something about darker clouds, and perhaps echoing the speech by Shinzo Abe, the Japanese Prime Minister. And on Friday, it's back to North America after a tour around the world with the Canadian jobs report, always important for the Canadian dollar, and US consumer sentiment, the preliminary read for June from the University of Michigan, very early in June, and just to the 10th of June. Anyway, sort of the last word for the weekend, okay? Yeah. And on June 10th, next week, the Euro Cup begins. I'll have to find, I guess I'll cheer Spain, but I'm not sure. I'm mentioning this because volume becomes a bit lower when there are football matches. Now, many of these matches are in the evening, okay? So Europeans are watching these matches, not Americans, but nevertheless, some of them are in the afternoon, and it sort of draws some attention away from markets, okay? And I don't remember when the games end. I think it's at the beginning of July, but we do know that there's an impact of football or soccer if you're in the United States on trading volumes. Okay, Lucas says, surprising how complacent the risk is in the face of forthcoming rate hike. Emerging markets holding up well, typically 9 months after the beginning of a Fed tightening cycle brings about sniff of recession. Stocks don't seem to be bothered for now. Well, my answer to that, Luca, is that this is not a typical tightening cycle because the Fed is moving as slow as possible. Okay, I mean, it basically is highest quality of slow motion that you can think about. We are seeing some slowdown in emerging markets, but usually these tightening cycles. Another thing to watch out for is previous tightening cycles were in tandem with other central banks. The US did not act on its own. Okay, maybe the US was leading the world. Maybe the tightening cycle was stronger in the United States than in other countries. But this time it's clear divergence. I mean, the Bank of Japan did more, the ECB did more since the tightening cycle began. And of course, since the tightening was talked about, since the tapering ended in October, if you can look at it like this, the tightening cycle began at the end of 2013 with the announcement of tapering. Then tapering ended in October 2014. Then we had talk about raising rates, a huge preparation throughout 2015, and finally the rate hike. And during all this time, we had more easing from the Bank of Japan. More easing from the ECB, more easing from other central banks as well. So, so it's okay. Previous tightening cycles were also together with other central banks, and we're not seeing it now. Jack says volume lower because they use the account money to bet the games. They're betting on games on who scores the first goal instead of playing in foreign exchange markets. But by the way, Luca, to get back to your comment, we did have a stark warning from Japanese Prime Minister Shinzo Abe and the IMF is also warning us. And Goldman talked about another devaluation of the Chinese yuan. Not all is pretty in the global economy. The OECD, the IMF lowered forecasts. Some talk about another crash in stock markets, some big default, some big event, the crash of commodities. And if you want to make dark clouds, paint dark clouds, you can certainly find lots of reasons for that. Okay. So this is the wrap up for the live market open for June 3rd. It's Friday, it's jobs day. Before jobs, let's talk about what we had yesterday. 2 events in Vienna ending in nothing. The OPEC meetings at least ended with no big fights, only smiles, but no decisions either. Nothing new on the Brexit front. Stable markets in general. What did the ECB do? Hardly raised forecasts, and this for me shows dovishness and pessimism. Eventually, the euro did slide a bit, but in a very, very narrow range. No relief for Greece, which is not good news, but not a market mover. New measures the ECB outlined when they'll happen. Both will happen before the Brexit. Sorry, this is 22nd. And once again, Draghi called for governments to do more. Inflation expectations are basically, on one hand, you might see price pressures coming in Germany. On the other hand, no movements elsewhere. No secondary effects from oil prices. There was no question about helicopter money. I think the question will return next month or the previous the next one. And governments, of course, should do more. Also, we had other events in markets. Worth noting that most figures just came out as expected, and the non-farm payrolls remain the same. Today, 8:30 UK services PMI. This is the most important PMI, and it could serve as a significant distraction, at least for 1 hour, from should I stay or should I go? The fierce campaigning in the UK. 12:30 non-farm payrolls. We'll talk about that more in detail. Canadian trade balance. And if the NFP isn't so significant, not a big surprise, we'll have the ISM non-manufacturing PMI and the factory orders. Okay, and last but not least, a speech by a dovish member, Lael Brainerd from the Fed. NFP, of course, jobs day, the most important thing. A gain of 160,000 jobs is expected, which is below the averages of around 190, 200,000. Everybody's blaming the strike in Verizon, which happened during the time of the NFP survey. All right. So because of this reason, basically many numbers, not all, but we could have various NFP numbers, and markets will say, okay, it's because of the strike or not. It's going to be a mess. So this time, perhaps more than ever, wages are more important. My bet is that if we have 2.7, which was the peak or higher, it's great news, dollar positive, raising chances of rate hike. 2.3, the previous range, or lower, terrible news. Other than that, the unemployment rate is expected to remain at 4.9. Watch for other figures as well, but as I said, wages probably will take center stage, the focus, the limelight, whatever you want to call it. Okay, let's do a quick roundup of charts. Oh, euro dollar is falling under 111.50, still within an extremely narrow range. Okay, so some strengthening of the US dollar as we speak, but very, very narrow. 111.30 weak support, 110.70, 110 strong support, 112.50, 113.33 lines of resistance. Pound dollar moving a bit up. 145, 145.80 resistance, 143.70 and 142.80 support. Dollar yen, the yen is generally stronger. We did see it move. 109.40, 110.50, 111.50 resistance, support at 108.25 and 107.65. Dollar CAD, hugging this line, used to be more important, 130.80, support at 130, 129.10, resistance 130, 170 and 132.20. Aussie dollar, strong resistance at 73, at 73.75, and to the downside, strong support 71.40. Kiwi, maybe making a move now above this line of 78.40, 69.50 and 70.50 strong lines of resistance, low support 66.70. All right, so hopefully bigger movements in euro dollar today. But after so many disappointments, it's hard to be really optimistic. But dollar yen will certainly move. It's one of the best market movers on US figures. Okay. And yeah, and again, further speculation should keep things interesting. Lucas says, are the Kiwi on the radar next week? Yeah, 2 rate decisions. Completing its tight shoulder, gonna be a buyer around 105.30. Thanks, Luca. Let's share your chart with everybody. Oh, very nice range there. Now getting closer to the bottom, but you're looking for an even lower level, if I understand correctly. Anyway, quite a nice range for this antipodian currency pair, if you wish to call it that way. Currently leaning to the downside. Yeah, the Kiwi strengthening, pulling this cross down. And yeah, let's see if there's an opportunity to buy this cross within the range. All right. Any more questions? Well, I guess you can hear the frustration about the lack of currency movements in my voice or in my comments. Hopefully we will get something a bit more significant today. Pairs to watch except euro dollar. Well, I would say that the best market mover, as we said on US figures, is dollar yen. Less noise, I mean, more focus on the United States. So if you are trading the non-farm payrolls, I would say dollar yen, okay, better than euro dollar. Also today we don't have any Eurozone events, right? And I would also say, well, maybe in the next hour we should have pound dollar moving quite a bit. around the services PMI, but as given the past, I think that these movements will be limited to the hour around the release, okay? From 8 GMT to 9 GMT, or in UK time, it's from 9 to 10, or here from 10 to 11. All right, and finding another currency pair. In theory, it could be the Canadian dollar. No. I erased my words, retract them. I think it's going to be major pairs, mostly dollar yen. Okay. Anyway, thank you everybody for coming. Wish everybody a safe and successful day in markets. Non-Farm Payrolls is always, it used to be a bigger event, but it's still, it hasn't lost its touch. I think it's still a huge one. And especially as we don't know about a June rate hike or not, it's still, well, there's still a possibility despite the Brexit events. I would watch out for the weekend also for new opinion polls. On Sunday, in many cases, UK newspapers release new opinion polls regarding the Brexit, and this could impact the open. And basically, that's it. So thank you, everybody, for coming. Wish you a great weekend, great trading. And that's it. See you on Monday. Thank you, and bye-bye.